Welcome to Yellow Tunnel. My name is Mark Rappel. I'm CEO and founder of Yellow Tunnel. And today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, talk about recent pullback, carry trade, inflation data, unemployment data, recession, soft landing, hard landing. Very important topics to kind of figure out what to expect short-term, medium, and long-term, and what are the leader, if we're gonna have the same leaders like NVDA leading the market to the upside, or are we gonna rotate into small caps and value stocks? Probably gonna spend half an hour talking about these topics and then open it up for questions. So please stay at least for 30 minutes. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. We do have a lot of new bar chart users, so welcome bar chart. If you guys are here, type it in. Glenn, Venkat, Mike, trader. Let me know if you guys are new. But this is my brief bio. I think the main difference between Yellow Tunnel and maybe some of the other services out there is that we do two things. One is my background is technology. I was a CTO of several publicly traded companies in fintech space that went public. And using my experience, I built a team of financial engineers that are building new models and enhancing existing models, right, financial models, to find patterns in the market, find which stocks or ETFs outperform the market and generate signals, short-term, medium, and long-term signals. And then I use these signals to trade in a live trading room, right? And we have Scott, we have Keith now. So we have different professional traders, right, that are managing the money, and you can get exposure to them in live trading room using these signals. So we use them, we have 2 sessions every day. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. I will go through some trading examples. But it's very important if you're new to trading stock or options to understand the risk involved. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we jump into trading psychology, which is very important, right? Especially when you have VIX. You wake up on Monday, all of a sudden VIX went from 20 to 60, right? And then on Tuesday or by Friday, it's back to 20. So these events, by definition, they are black swan events. You can talk about that they will happen, but predicting the day that it's going to happen last Sunday, probably impossible. So it's very important to have a trading plan, right? And rules that you follow, right? The idea of the economy of control, that you have a process, right? And that process is created so when you do have the jump in volatility, you can deal with the uprise in volatility. So we're going to cover these psychology terms briefly, but let's take a look at the market. So pullback started probably very similar to last year, right? It's almost to the day, right? So we kind of reached the top probably towards the end of July. Then the pullback started in the beginning of August. We reached the bottom probably by August 18. Strong rebounded 2/3 of the of the pullback, right? 10% pullback. And then another leg down in September and another leg down in October. So this is similar, not exactly identical. Looks like the pullback is a lot stronger, at least initially, a lot stronger and faster than the last year. It started with the Fed decision, right? In terms of interest rates. On Thursday, we had an initial pullback that everybody expected for Powell to change the rhetoric and to be more dovish and say that we will lower interest in September. Instead, he said it's on the table, but again, it just depends on the data. So the market woke up on Friday, and especially after tick up in unemployment data, we had another leg down on Friday. And we stopped at 530 level where we're currently trading. And then over the weekend, carry trade, right, where Ultra low interest environment in Japan has been there for decades, right? And a lot of people or a lot of institutions borrowed the money in Japan, translated them into, U.S. currency, euro, and bought riskier assets, right? Riskier assets. And now this trade kind of reversed, right? Because Bank of Japan said they're going to start increasing the interest rate. We talked about that for the past at least couple months. But still, if you look at the FXI, it was kind of just grinding higher without any dislocations, right? Without any dislocation, it kind of start rebounding when Bank of Japan intervened. And we talked about it, middle of June. We talked about it end of June, end of July, but it was in orderly kind of fashion. And then, on Friday, when they actually said this is when we're going to do this, then you have the largest drop in Nikkei since 1987, right? Since 1987. Pretty large steep drop in one day. And this is not one day, but 30% drop in short period of time. It has recovered somewhat, still below 200-day moving average, still below 50-day moving average. A lot of economists basically look at, they want Nikkei to be above 50-day moving average. And as long as Nikkei below 200-day moving average, we're still vulnerable for this another leg down, because nobody really knows how fast this trade could be unbound, right? In terms of positioning, it got much better. That excessive positioning in carry trade got better, but still, there's a lot of assets that needs to be unwound, and that it could come in waves. For now, I think Bank of Japan said we're not going to raise interest rates, but at some point they're probably going to announce again that they will raise interest rates. Just, I guess, at least I don't know when it's going to happen, but I think it's still on the table. So that's the pullback since then. When you look at the high yield, another proxy for risk taking, right? We reached 200-day moving average and right away almost rebounded to the, to the trend line. So the high yield, the spread got stable very quickly. VIX also dropped. It went from almost 70. We had an 18 print today. We closed at 21, but still a very fast reversal in volatility. So buyers did step in. QQQ is still trading below 50-day moving average. QQQ has been below 50-day moving average since July 22nd, almost 3 weeks, right? So that's pretty bearish price pattern. Semiconductors also extremely oversold, below 200-day moving average, below 50-day moving average for quite some time. Spiders has been below 50-day moving average since also end of July. So those are considered to be bearish price patterns. Small caps, right? We talked about a couple of weeks ago the broadening of the rally, right? Everybody got excited, and then you have very large reversal, right? Kind of almost vertical move down. Again, on the fears of recession, right? Fears of recession. So you have a kind of vertical move reversal, which is bearish price pattern. 10-year yield also kind of vertically moved down. 2-year yield vertically moved down, indication of a recession, right? So now market participants are less concerned about inflation, because inflation has been trending lower, but they're more concerned about economy. And even though GDP was, last quarter, second quarter of this year was over 2%, I think the trend is lower, right? The trend of GDP growth is lower. The job openings ticked up on Friday, so concerned about unemployment, concerned about we have retail sales. Retail sales have been trending down. Housing construction, housing sales has been trending lower. So economy is cooling off. So we're back to kind of a recessionary pressures, and everybody talks about whether we're going to do soft landing or hard landing. Recession usually in the rear view mirror, right? By definition, unemployment has to, significantly increase. You have to have 2 quarters of negative GDP. We don't have any of that, so it's hard to say that we are in recession today. But those are main concerns, right? And from a technical perspective, it's been pretty sharp pullback, not only in NVDA, where we were down 35%, right? So NVDA was down 35%, but also, Bitcoin was also significantly lower. Down 35%. So those are pretty sharp pullback in the market. So what's next, right? What's next? So let's go over that. Let's go over the positioning, right? See how people are positioned. So going into the August expiration. So this week, not only do we have retail data, we have CPI data, we have PPI data this week, right? That will indicate whether inflation is subsiding or if there is recessionary pressures are going up. We also have VIX expiration on Wednesday, and then we have OPEX expiration on Friday. And this is kind of when the sell-off kind of started, right? If you look at the spiders and you look at the third Friday of July, right? Third Friday of July, right? This is when the market started to pull back, right? And then right after that, we had initial leg down, market never stabilized and still going lower. So it could be the same thing where we have OPEX and VIX expiration, we have inflationary data, and then going into the next couple of weeks, you could have any negative news, and because of the positioning, market could again pull back. So August 16, going into Friday, you have a pretty large positioning, right? Where dealers are long the gamma, and they have to step in, right? 50,000 is a pretty large number, buying at 520, right? So I think between now and Friday, bears are going to have hard time pushing the market below 520. Obviously, if there is a carry trade or Iran bombs Israel, geopolitical risk, obviously the positioning will not matter this much. But all the black swan events aside, right? Since we cannot time it, I think 520 is well defended, right? So 520, I think, is your first line of defense for this week. And obviously 200-day moving average and last week low is the second, right? So that's your support number one, right? Support number two. Overhead resistance, we basically closed the carry trade gap. We still haven't closed the unemployment data. So those are your resistance one, right? And resistance number two. Right, the 50-day moving average. So, by end of the Friday, we could be at 545, 550, or we could be at, 510, 520. Right, both scenarios are possible between now and Friday. Now, outside of Friday, going into September expiration. Actually, I should probably start looking at October expiration. Well, I guess not a lot of people buy in October. 520, you have 25,000. So after this Friday expiration, going to the next week, right? Again, you have these repositioning in dealers. 520 is somewhat defended, 25,000, not a lot. Next level is 510. So you have these 25,000 contracts at each of these levels. And then majority of the positioning is 500, and the largest strike is 480. Right, a lot of people are calling for 480 level, which would correspond close to April lows. Right, it would be close to April lows, or actually, basically giving up all of the gains for this year. Right, if we traded 480. So 480 is pretty well positioned, but anything before that, whether it's 510, 500, you just need a catalyst, right? You just need a catalyst, whether it's some recessionary data, right? Maybe unemployment data again ticks up. Maybe it's a Jackson Hole meeting at the end of the August, but the market is vulnerable for further pullbacks, right? So let's go over the scenarios, right? We always go over scenarios. One scenario, right? We're trading, this is the bottom. Right, we always talk about, you can't call the bottom, but can you find bottom building process, right? In the past 6 days, we retraced half of the losses and did not make new lows. So this might not be the bottom, but it's close to the bottom, right? Maybe it's 500, maybe it's 480, but close to the bottom. So why are we trading in the range, right? Well, why are we breaking out, right? The bull trend renews. right? August is vulnerable, but September everybody's back from vacation. And then NVDA has earnings end of August, right? NVIDIA has earnings end of August, and they on the AI they hit a home run, and market resumes its upward trajectory, right? Long term, we're still in strong uptrend, right? Long term, bulls are in control. We did break through that trend, obviously. We did break through this trend, but you know, we could resume its upward momentum. So that's scenario number one. Scenario number two, we're unable to get through this broken uptrend, at least short term, and we're trading somewhere between 560 and 510, right, for the next couple of weeks, couple of months, right? We still also have unknowns in elections, and elections is also a carrier risk as we're getting close. And scenario number three, we don't hold 200-day moving average or this bottom, and just like position where most people are positioned at 480, we actually drop, and more signs of recession, right? Maybe unemployment data is much higher again, in the beginning of September, maybe during Jackson Hole meeting, Powell doesn't change his rhetoric and he still says, yeah, September is on the table, but we'll see what happens. So then you have scenario number three, where we basically given up all of the gains since the beginning of the year. So how many of you say one? Listen, long-term uptrend is intact. GDP is over 2%. AI is here. Earnings are strong. We have broadening of the market rally, and this is just a 10% pullback is healthy pullback in any bull market. And we're going to resume it in September, October, right? Before the elections, we will resume this upward momentum. So that's scenario number one. Scenario number two, enough damage from technical point perspective has been done. Potentially signs of weaker unemployment ticking up. Maybe retail sales are down. Maybe manufacturing data continues to deteriorate, services data, but it's still signs of soft landing, right? And we're just trading into, right, scenario number two for the next few months until the elections, right? Usually November, December is very strong, right? Especially after the elections, but so that's scenario number two. And scenario number three, there's more evidence that we are potentially soft landing is not the core scenario, and now the core scenario becomes hard landing, and we break through the 200-day moving average and basically revisiting highs of 2023. How many of you say, Lalit, welcome back, how are you? How many of you say 1, 2, or 3? We're trading in 2, we're trading in 3 or 1. Peter, 2, thank you. Bill, Dan, Glenn, Lalit, Luis, Terry, Tim, Trader, Venkat. Anybody? How many of you say 1? Then 2, everybody 2. Okay, so everybody says 2. I'm gonna say 2. Yeah, at least as long as we're above 500, 510, I think 2. So I do think it's scenario number 2, right? That we're probably close to the bottom, right? Even last year, you could basically see how far we were from the bottom, at least on the first pullback, right? We pulled back 5%, and the bottom was at 10%, right? So it could be the same thing, right? Where we are down 10%, right? And then maybe we'll be down, another 5%, right? Which would be close to 480, 490 level. So again, 510 is not guaranteed, right? Especially if we're gonna reverse and have hard retest of this number. We could go lower, but at least it's a strong enough rebound to indicate that we're close to the bottom. 510, 490, 480. All of these scenarios are still possible, right? It's too early to tell whether we're, just going to have a V-shaped recovery or we're going to have a hard retest of the 510 level. The fact that it's been over a week and we're still 5% above from 510, I think that's a good sign that that 510 will hold, right? 500, 510 levels will hold. And there are not a lot of positioning going into September, but there's some, right? 520, 510, if you add these two numbers, 50,000, I think it's enough to hold the bears. So I would go with scenario number 2. Any questions? Thank you. So in terms of trade ideas, you can see we have different services, right? Profit Accelerator is one of our services. Aggressive Power Trader gets updated every single day. Let's make it larger. So every day there are signals from Aggressive Power Trader. Baxter, right? You can see Baxter. So not all, I mean, usually when the market pulls back, most of the stocks sell off. But Baxter actually after the earnings in June, July, August has been in a strong uptrend, right? So Baxter is one of the ideas. It looks like it reversed this downtrend. What else did we have today? eBay and PayPal, right? We had eBay. eBay is actually close to 52-week high, right? So it's able to kind of withstand, at least short-term, withstand the volatility, right, on eBay. And PayPal is also, at least short-term, outperforming the market, right? You had a strong reaction to the earnings, pull back, but still has a strong chart. So these are all short-term ideas. Some of them I traded. I think eBay actually put on a trade today. Also small position because I think we could revisit the lows. But I was able to get into eBay, long eBay. Weekly Power Trader, longer term signals. You can see, stocks that are model basically see overbought, right? Some of the utilities, right, like AEP, right, in strong uptrend, or utilities in general. XLU, if you look, has been in strong uptrend. Consumer staples has been in strong uptrend. We have XLP going higher. Stocks like Coke, Philip Morris. People do rotate into these value stocks, so you see kind of a strong uptick in these names. Costco is another interesting stock that we basically give you signals that the model provides on daily or weekly basis, right? Costco is also a very strong uptrend, close to 52-week high. So those are the weekly trader. You kind of, some of them I trade in my account, some of them I don't, right? But this idea is that you get signals, and then you can participate in live trading room and ask questions if you want to trade them. Dynamic Power Trader is actually where I trade all of the signals, right? So you can see today I'm hedging, right? I bought a QQQ put spread, 470, 465, closed half of the position 330, and looking to close the rest of the position at $4, right? So I think right now it makes sense. If you said 2, you want to be market neutral, right? Maybe you have 2 bullish positions and a couple bearish positions. So I closed a lot of the bull position that I had when the market pulled back, because I'm down 2.5%. The idea is to be disciplined, right? To make sure that you don't lose more than 2.5% of account value. And if you have 4 positions and you're down 2.5%, that's 10% drawdown. If you allow 4% or 5%, well, that could be 20%. It's much harder to recover when the market positions are down 20%. So I'm still long LA Lilly, right? I've been trading around LA Lilly position. I think earnings have been strong. It has reached 200-day moving average. It rebounded back, so that looks strong. Silver, still bullish on silver. I mean, it did give up half of the gains for this year, reached 50%. It's acting like a market, so it hasn't reached 200-day moving average, but it's closed the second gap, right? And now it's going to try to close the first gap. Very sensitive to interest rates. Metals and miners have been traded very close to the market, so obviously 50-day moving average is rolling over, but I'm still bullish on silver. right? Still bullish on silver. NVDA, in terms of NVDA, I mean, obviously we have earnings in the next 2 weeks. It spent a lot of time below 50-day moving average. I mean, earnings are very important, right? So they need to deliver in August. Last August, I think they also had a strong quarter, right? Last August of 23, and the original reaction was up, but then market kind of, it didn't go that far, right? And then when the market rolled over in September, you know, NVIDIA followed along. So it could be kind of similar, where after the earnings, it can, you know, rebound back to 130. Right? Estimated reaction is 20% to the earnings. So it could be a $130 stock, or it could roll over and, you know, retest 90s again. So for now, we have AMAT. We'll see how the market will react to AMAT earnings, which is on Thursday. That'll be interesting to see. But also steep drop. This is AI stock, and it's a 200-day moving average. Palantir had earnings, right, and it had a strong rebound. So if the stocks, you know, deliver on the earnings, right, it was down, you know, close to 200-day moving average, and it delivers strong earnings, and now it's back to all-time high. Maybe not all-time high, but multi-year highs. So earnings obviously is very important for some of these stocks. So that's NVIDIA, Palantir. In terms of financials, I mean, we do have, one of the observations is that we do have normalization of the yield curve, right? Where for the first time in past, I would say, year and a half, the 2-year yield is now trading, you know, below 30-year yield, right? So this normalization, where you have a steepening of the yield curve, even though it could be violent, but at least it's a sign of normalization. Usually small caps or banks would be a beneficiary. Obviously, it did pull back with the market, but ever since it had a strong rebound back to the above 50-day moving average. So JP Morgan continues to be a strong stock. So that's Dynamic Power Trader. Combination of both stock and option trades. You can find stock option trades. You can enter your phone number, get SMS messages. You can analyze any stocks, right? If you want to know what NVIDIA prediction looks like, then it will give you 1 month, 2 months, and 3 months prediction. Still strong uptrend. NVIDIA is still in strong uptrend. So I think long term it's a good opportunity, but short term, you know, it's obviously prone for pullbacks. We also have Earnings Power Trader. You can see it when you click on dashboard. You can see Earnings Power Trader. AMAT, Alibaba, Cisco, JD, Walmart are all announcing earnings this week. And today I didn't do it in the service, but I did trade Home Depot, or at least explain how we trade Home Depot. Home Depot announces earnings tomorrow. I didn't want to do it as a specific trade because it's a $300 stock, and you know, if you off by 1%, it could be $340, right? Where you're down. So I prefer to trade smaller stocks for Earnings Power Trade. But if you have a larger account in the live trading room, you can watch the recording or participate live, and you know, we went over those trades. We have JD, we have Cisco this week, Alibaba. So those are the trades that I'll probably do in the next couple of days. And then finally, Profit Accelerator, where I trade stocks, predominantly stocks. We talked about silver a little, but I also hedge, right? I also hedge. I don't know where it went, but oh, it's restarting. Okay. So that's Profit Accelerator. You can find more details in dashboard. All right, you can go through each of the service. There's a video, and then it explains holding period, how often the alerts are issued, you know, target gain, delivery strategy, Earnings Power Trader, Profit Accelerator. We have a getting started guide if you want to start learning about our platform, about how to trade. We have educational webinars, right? We have dedicated support. I encourage you to schedule one-on-one consultation with our dedicated support. Every Sunday, we send out a blog, which you can find here under Power Trading and Markets. I encourage you to have add info@yellowtunnel.com so you can get our weekly blog. And then trend analysis every Wednesday. I send 5-minute video on trends, right? So you can look at the analysis of the trends, support resistance levels, and different trade ideas. So trend analysis every Wednesday, webinar, blog every Sunday. We have a lot of educational videos and blog, so I encourage you to go to Trading Concept. There's different, guides in terms of stock market and psychology, and then market plan and trading discipline. We have different webinars, 3 keys metrics for consistent trading results, trading discipline, bullish call spreads, some of the psychology. So I encourage you to look at these videos. We have a pretty large library on trading psychology and other important topics. Some of the topics I covered here is, positive, negative visualization, right? Go over scenario 1, scenario 2, scenario 3, 4. Before you get into the trade, right? The idea is to avoid flight or fight response, right? Fight or flight response. The only way I learned how to do it is controlling the position size, the number of positions, right? If you're down more than 20%, doesn't matter how long you've been trading, you're gonna be in this fight or flight response. If you're down 5-10%, I mean, it's not good, but you kind of adapt to the current volatility environment and you move on. Game theory, right? It's not important what Vlad thinks, but what important is in terms of people's positioning. Right, have a long-term investment view, compounding investment, right? Looking for these 0.5% gains on daily basis, right? If you do short-term trading, you look for 0.5% to 1%. If you hold in position overnight, maybe you look for 1 or 2%. If you hold in position for a couple of weeks, maybe you're looking for 5% gain. But over a long period of time, it does compound, right? And it takes practice to internalize some of this information, right? So I encourage you to kind of have a long-term perspective on trading. Some of the other psychology concepts we talked about, prospect theory, probably the most powerful. Behavioral economics, where you have a different relationship between, we all have different relationship with money, and we all have different relationship with gains and losses, and they are asymmetrical, right? $100 gain and $100 loss feels different for different people. So when I say 2.5% gain, on some of your positions, right? If you're up 2.5%, I mean, you're kind of happy, but you tend to forget about this, right? If your position is up 2.5% and you up, let's say, $250, then most people just cut their gains short and exit out. But if you're faced with 2.5% loss, right, or bigger, most of us hold on to the position, right? Most of us hold on position. And sometimes it recovers some of the losses, right? Maybe half of the losses is recovered, but sometimes it goes, lower, right? And now you're down not $250, but you're down maybe $500, right? So prospect theory, this asymmetrical relationship between your gains and losses, it's a very important, concept. So there are books, right? They wrote books, Daniel Kahneman and Emma Tversky, they wrote a book. It's studied in all the behavioral economics and finance courses. Very important concept. I encourage you to review that. Also thinking, the other book that I really like for traders, Thinking Fast, Thinking Slow, right? Daniel Kahneman. And the other one is Thinking in Small Bets. Thinking in Bets. This is another kind of interesting book that talks about, you look at probability of success, right? In earnings, we always look at probability of success and return on capital, and you're consistent, right? You always risk 1% of your capital. You always risk 0.5%, or you always risk 2.5%. So you're thinking in these small increments of your account value, and you're looking for, you think about prospect theory, make sure that gains, you always have the same gain, relationship with gains and losses always the same. and you're looking for probabilities over 50%, right? And then you do this over and over again, and that's how you build on your portfolio. All right, Bill, Dan, Glenn, Lalit, Louis, sorry if I mispronounced. Peter, Raymond, Terry, Tim, Venkat, Michael, Steve. We have Trader. I'm not sure what the email, just the email. But okay, I mean, that's all I have for today. Try out one of our subscriptions. We do give 30-day money back guarantee. Hopefully you'll enjoy it. Thank you for participating on Monday night. We actually had a lot of people. I'm really happy. Looks like we have more bar chart users. So thank you very much for participating. And I will see you guys hopefully in the live trading room or in the next webinar, which should be Sunday. So we're going to go back to Sunday schedule, and I'll try to alternate so Peter can join us too. All right, thank you very much and have a great day. Thank you, Luis. Thank you. Thank you, Peter. All right, everybody, thank you very much.